But yeah, in terms of this, you want to get the big, juicy, fattest checks and to get the cash reinvest into that pie and to allow that snowball to grow. And because realistically, what is happening here is just allowing the speed of this investment to go. Even though it's 11.77% returns on average over the course of these stocks, we're still going to be hitting some lofty targets in and around a portfolio element of 2040, which isn't that far away and actually hits the ballpark figure for when I am 30. I'll be 49 when that actually happens. I have to do some quick math. So it has increased the speed. But also, even though this is hitting a million, I know this is unrealistic, obviously, but you can see how the overall growth of the dividends and the dividend yield here is going to be pretty impressive by the time we hit year 10, which you could be arguing we could be looking at £24,000 per year if it all stays the same or gets even bigger. Now, in terms of the overall portfolio, let's go through it. So you can see 20% in the two ETFs, that's 40%, and then 60% of it's individual stocks. I have a trust fund in here. I have all the bigger ones hitting the 5% mark, then going into the fours, then going into the twos and the threes, essentially. And that's just, in my viewpoint, just makes obvious sense. Now, in terms of the overall annual growth rate of it over the course of the average, 12.79%. So it's actually, they're still distributing some gains there and actually quite normal in terms of stock market standards, plus the yield at 4%. So I think I've got it pretty much nailed on. The time now is to basically just keep investing and investing and investing. There's a couple of things I am looking at in terms of individual stocks to maybe add to it, but not yet. I'm just going to wait. And I think for me, overall, I want to keep it simple. And I think that this could be a pretty solid overall growth portfolio. It just needs capital.